Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, October 16th, 2025. It's 11:47 a.m. Eastern Time. This is video number 2 of the day. Guys, I'm just seeing so much setting up in the charts. Like I said, just a lot of sectors, key stocks, things that matter. And again, the markets can unfold any way they want. Nobody can rule out a blow off top in the markets, kind of like what we're seeing in gold and silver. But I've been stating I don't think that's the most likely and probable scenario. So again, what I do in these videos, I get long-winded, but I share both trade ideas and then the things to watch. What we're going to do in this one is, I've highlighted this sector in the last couple months at least once or twice, along with some of the others like the restaurant sectors, things that are really a tell on the consumer. And this is the casino and gaming sector. This is BJK, the ETF that holds those companies. And I've shared some of these as trade ideas with you over the last year, including a long trade idea here. So what I'm going to do in this video is just cover this sector quickly, and there's only a handful of components in this ETF, and then I'm going to cover the capital market sector. So, the way I see it is casinos have been sucking wind lately, and I think that's a function of the true degenerate gamblers, not the kind like you or I that might go to Vegas for recreation once in a blue moon and know we're going to walk in, hope we win something, but expect you're probably going to end up losing because if you're smart enough, the house has the advantage, right? But then you have those degenerate gamblers when you've got to catch that 7:30 flight out of Vegas and you're walking out of the hotel and 5:30 in the morning and you see the red-eyed people slumped over, the one-armed bandit and at the craps table and all that, they've been up all night. Those are the degenerate gamblers. I think my theory is a lot of them have probably realized, shoot, you got, the odds are against you when you walk into a casino. You got to fly out to Vegas if you don't live there or wherever you're going to gamble. And why not play the stock market? Lately, it's been almost a sure thing, especially if you just bought anything AI related, tech related. And so we're going to get to the capital markets in a second. I think that is the next shoe to drop. I do see a big drop coming. And as I said, it's one thing to give price targets. The folks on TV will do that. They give you rough price targets, but with no time frame to get there or how things are going to play out. And they're either going to be right or wrong, like me. I'm a little more specific on my targets, exactly where they are. Not only that, where you're going to go from point A to point B, but all the little zigzags between. In other words, multiple price targets where you can game pullbacks off the first, any of the price targets if they look likely. And actually, so if you have a 30% move in a stock and you game of those 2 or 3 counter trend moves by reversing the trade long to short or short to long, you can turn that into a 40-50% gain. I'll often do that. So that's the active trader part. That's what we're here to do, swing trading. You want to invest, go follow Warren Buffett, and some of the old greats. Put your money in an index fund, listen to the late great Jack Bogle, and 30 years later, you should be up quite a bit. All right, so let's dive into these charts. And again, swing trading is all about, using technical analysis and signals. So this chart's a little busy, but I guess it would have been the last time I updated somewhere up here. We put in that most recent divergent high, just like that one before and that one before it. And this is swing trading. You look for these. Sometimes they'll get divergent lows. You want to go long. This has been a sector that's just been, for the most part, stair-stepping lower, mostly sideways-ish. Most sectors are going to hold up with the stock market, especially those consumer-related. Remember, this is mostly a form of discretionary income. When money that gambling is a thing most people want to do but don't need to do. So that's discretionary. Some, are actually addicted to it, and then that's a whole different thing. So there it is, breakdown, back test, nice drop. Looking to take out the 200s here, but we're on this support level right here, which I gave you back. Last time I updated this line was I created it in 2017. I updated it in May of 2018. I haven't touched it. It's just been a level that these stocks tend to have reactions on. Support when above and resistance when below. All right, let me dive into the individual component. We'll do it quick. Again, some of these might be trade ideas, kind of more of an overview of the sector. There's Las Vegas Sands. And again, I might not talk on every little annotation on the chart. You can see there's a divergent low, breakout back test. That's a good long entry. Divergent high, big drop there. And these guys tend to move pretty good. So it looks like when I look at this chart, we're early in to the next downtrend in this sector. And sure, there'll be bounces along the way. Dip buyers do what they do, even in a bear market. Even myself included will come in and buy pullbacks to drops to support, key moving averages like the 200 days. But once the 200s are taken out like they were there and then back tested, that red line's a 200 simple, blue's the exponential. Blue's the simple and red's the exponential. Once those levels clearly go, then you usually get the next leg down in the bear market. So that's what you want to watch for a lot of these stocks if you're going to engage this sector. None of them are screaming long entries here or short entries. I'm just kind of clicking on these and giving you the overview. Some I like better than others. This is Wynn Resorts, big one obviously. Beautiful, beautiful bearish rising wedge. Again, these would have all been covered back here. There was your sell signal. And this one since then has already dropped as much as about 11%. And I should have, and probably should have done that in the last video. You had nice resistance here. You can see this trading range with a big green breakout candle, and that's what they hit. So now that's the level that needs to go. And when you see that they ever so slightly, you want to put it on that last reaction low. And then what you do is you set a price alert. Again, if you want to engage a sector, next stop on Wynn will be the 200-day moving averages, and or you've got some price resistance around here, also up to here. So there's one for you. MGM, and this is a stock in a bear market, clearly. This is a downtrend, simply lower lows and lower highs, and that's exactly what you're looking at here. Most recent divergent high breakdown, there's where we're at. BYD, Boyd Gaming, divergent high right there. Most recent divergent high right here. Just like the previous one was there and the one before that right there. Then your sell signal, remember divergence, I often say is not a sell signal, it is a condition. A condition that generally or typically precedes trend changes, whether they're bullish or bearish divergences. And then what you need is a sell signal. In this case, I don't have a clean up trend line. We had one here. That's when I started focusing, getting bearish on the sector. And it certainly has, since breaking that trend line, corrected. As I often say, there's two ways a stock can correct or a combination thereof. They can correct. Most people think of a correction with the price dropping, but you can also correct when you're going up in time by going sideways. And so this is your next sell signal below 80.70 right there, and set a price alert. And based on my outlook for the sector and the market, I have a high degree of confidence that will happen. And so there's an alert set. If it does, I'll look to see if I want to engage this sector or not. LNW, Churchill Downs, a lot of the, if you really kind of hone in, nobody bats 1,000. I talk about that often, and people are quick to criticize market calls in the broad market, but never hardly ever talk on the individual stock trades. But you have more of a pure play quite often with the individual stock trades as far as the way technicals work. Here's one. We bought it long off the divergent high. We hit my third and final potential target there. Intraday spike, never even closed above it, closed right on it, and then reversed right back down. So this is an example, and there's a lot of these on the site where you milk 100% of the move, sidestep it. I don't know if I mentioned it as a short trade there, but you also ran into the 200-day moving averages and everything else, and just kind of shows. Now, I'll tell you what, if you're looking for a long in the sector, this would be my top pick once again. You have positive divergence. You're making an equal low, maybe a slight marginal new low. Again, if the stock market melts down anytime soon, which is still a possibility, yeah, it's going to take almost everything down with it. But that's what stops are for. This was from the old previous trade. So again, there's no evidence of reversal yet. If you want to wait and be that second mouse that gets the cheese, wait for a break of that minor trend line right there. Or you can take a partial position here at support, because sometimes what these things do is they'll gap up, like on Monday or whatever, or any given day above that level. So targets, if you're interested, just drop me a line. I would move this line down. T1 I'd put about right here, a little lower. I would change the targets on the upside from the previous targets. And again, I'm not, I'm pointing out some of these longs. These are stocks in bear markets, so maybe a bear market rally. Just had a price alert go off on Riot. I don't know if you heard that buzz. I'm just clicking through these and showing you, this one put in that positive divergence there, divergent low. Nice rally, but it's come full circle with that divergent high, and it's testing support now. Okay, Riot price alert just went off. Let me just look at that real quick. It's not below there yet, but it needs to take out this trend line and that 2076 level. And then, so consider this a trade idea for you right here. Nice little bearish rising wedge. First stop and minimum target, preferred target would be a pullback to this uptrend line. I've traded this stock many times in the past, and the gains are usually above average. That'd be about a 20% or so drop to get there. Looks like we had... we went long when I covered everything off the April lows. This was one of the trade ideas I gave you and had all three targets hit and then some. All right, back to the casinos. All right, so the other sector I wanted to cover, I just wanted to kind of give you an outlook of the casinos. And the real casino in this day and age has undoubtedly been the stock market. This is 1999 all over again, just change, plug in different names for what the bubble's about. And justification, like all bubbles, justification for why it's not a bubble. That's what they'll come out and tell you, that, oh, it's different because the AI companies have real earnings. The dot-coms didn't have earnings. And again, as I told you, it's just a positive feedback loop that when it will reverse, goes the other way, that the same powerful forces that brought all those stocks up and the market with it, because they have the highest cap weighting, will do the opposite in reverse. I feel strong on those convictions. All right, there's capital markets, last bearish rising wedge. This was a divergent high. It's not labeled as such. So is that. And you can see we're just now, this one has more meat left on the bone. So I'm going to go through these stocks in no particular order. Actually, I have them sorted right now in a watch list by biggest decliners today. Keep that in mind. I usually go through a market cap, and I'll point out the bigger ones when we get there. But this is just kind of shows what's going on in the sector. Again, this is the casino known as the stock market. Mercury FinTech Holdings. FinTech, as I told you, FinTech is kind of related closely with the private equity, private credit bubble, and you can see this one popping for sure. Here's a stock. What does that look like? Looks like silver and gold and everything. This is a parabolic uptrend. How many times have I said parabolic uptrends? I've never seen them end well. They usually end just like this. And so if you were the poor guy or gal that bought right there recently, in just a matter of a week or so, you're down 73%. And it's not done yet. This one they'll step in and buy it like they usually do, unless this company is going to go bankrupt or something. I don't know. I haven't looked into it. It's going down to about $8. I wouldn't touch it until it gets there. ZABI, this is AITF Holdings, and I don't have much of an opinion on that. BITF, Bitfarms, all this crypto crap. When the stock market correction is clearly underway, you will see, as I predict, an unwind of the biggest margin credit bubble in history. Again, each one gets higher than the other, so I don't want to make that too big a deal. As I already showed you, relative to the S&P 500, they say it's not as bad as others. However, as I've showed you before, and if you want that chart, if you're new to the site or missed that video a couple weeks ago, I've covered a couple times. I'll post a chart of the FINRA margin interest, which again has gone parabolic, hit all-time highs, and when that unwinds, it goes the other way. And all this crypto stuff, will especially these proxy plays that aren't direct, Bitcoin. They're a play on Bitcoin, and this is BITF, Bitfarms. And you can see just everything like this gone parabolic with the casino in the market lately. There's your uptrend line. You can even do, when you go see a stock like that, you could drop down to a 60 and give yourself a minor trend line that'll most likely start the selling. That gets you in a little earlier. That's what it looks like on the 60, negative divergence. And then you'd have a trend line down there. And so on BITF, maybe I'll revisit this one later. Consider it a trade idea for you. If it breaks that trend line, it's going to go down to this uptrend line at minimum. That'd be about a 60% drop. So, it's a story. These higher flyers have bigger gain potential and bigger loss potential. BTM, Bitcoin deposit. You can just kind of see where that one's going. Hive, HIVE, Hive Digital Technologies. Been moving lower. I don't have the chart really marked up for you, but again, a lot of this stuff kind of topping out lately. Could just be corrective action, but a lot of it looks bubblish. I don't have an opinion on that one. This one's just spiking up. Again, you look at the volume, you can see these buying climaxes going on in a lot of these stocks. I'm going to click through here pretty quick till I get to some of the bigger ones. This is Argo Blockchain, big resistance level. I've had that level there since 2024. And you can see it just ran into it, 94 cents. That's a big wall, that $1 level. When you trade below $1 for too long, you risk delisting. Wolf, TerraWolf, beautiful little bearish rising wedge with a sell signal. I think I already have an alert on this one. I've been following this one to come there. There's my targets. So my first target, 1045, would give you about a 26% profit. Second target is a trend line. So if and when it's hit, if we have a swift move down, we come in and hit that trend line there, it's about a 40% drop. Otherwise, if it takes a while to get there, that would coincide with that first target, and you'd only make about 26% only. I don't know this one, ILLR, I can tell you, just put in a big divergent low at the recent lows. Thinly traded stock, I can tell just by looking at the candlesticks, and that's it. Breakout, bear market rally back to the 200s, and that's usually where those things end. CFR Cipher Mining, beautiful little setup right there. Trend sell signal come on a break of that trend line. Again, I may have alerts, but it never hurts to set additional alerts. Mara Digital Holdings. I don't have it marked up. IREN, Divergent High, ready to pop. I believe I have a trend line alert set right there. Again, I'll just do it to make sure. And you can see my first targets all the way down here to this primary uptrend line. So when we break that minor uptrend line, I have nothing but about 36, give or take, percent or so downside to that first and current sold target for you there. Figure, not enough trading history. JEF, this is a bigger one, Jefferies Financial. This one is, if you ever want to know what a company does, go to Yahoo Finance. They have a great section. Click on the summary. It'll give you a description of the company. Jeffrey Financial is good. This one's been around. This is a big one. Operates investment banking and capital markets in the Americas, Europe, Middle East, Asia Pacific. The company operates in two segments, investment banking and capital markets, as well as asset management, those two segments. Provides investment banking, advisory services with respect to mergers or acquisitions, debt financing, restructuring, recapitalization, and private capital advisory, blah, 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 blah. You can go on. Placement services related to corporate debt, municipal debt, mortgage-backed securities. All this good stuff is in there. You'll see. You've got basically this is what capital markets are all about. So again, this is what keeps the juices flowing in the stock market. These type of companies, and you would think that they would be at or near all-time highs if the stock market is. But again, the stock market is not the economy or even the capital markets. The stock market right now is AI. If you break it down, what's driven it to these levels, it's those huge cap-weighted mega cap $3+ trillion companies doing almost all the heavy lifting. And this is a tell. What's happening here? Why is Jefferies, why did it peak back in the beginning of 2025, fail to make a new high and then break a primary uptrend line? And why, especially lately, has this stock plunged 23%? Something's going on there, something that's not good. You can see it broke that 55.22 support, back tested with a little bear flagging action. That's what that looks like to me, and it's just broken down. If it is a bear flag, that doesn't bode well for this stock. You take the measured target, which is known as a flagpole, the impulsive move leading down to the formation of flag, add that to the highest point. That's how you have to measure it, the highest point before the flag broke down. And that gives you a measured target, which is going to take this stock, if hit, down to its April lows when everything was in meltdown mode due to when people first thought Trump was serious about these, 300% stupid, number tariffs. All right, a couple more. Again, I'm just clicking through here quick. This is how I usually look at a sector. That one's breaking down right there. This one's clearly in a downfall. WAI Top King Win Limited. Never heard of it. HUT 8 Corp, HUT, waiting to break that trend line. The minor trend line will take us down here. And again, trying to put it in perspective how much these drops are. About 36% would be my sole price target. Yeah, they'll buy the first. They'll come in and buy this one right here. Most likely, unless the sector or the markets are in meltdown mode then. So you drop about 28%. You could game a bounce if you're so inclined, if you think you're going to get one, and then it'll drop ultimately about 40% there. Bit foo-foo. I have no idea what that is. Riot, this one, again, I've gone over this, traded this one quite a bit in the past. I already covered that. Gemini Space Station. I don't know what that is. STKE. GLXY, this is a new one, but there's a trend. New, when I say new, when you don't have price history, this means they just came public, just started trading when you look at a chart like this, and it only goes back a little bit. So you usually can't chart them until you have at least 6 months, better to see a year or more. The longer price history you have, the more accurate the technical analysis is going to be. MRX, Merrick's Group, beautiful downtrend line. It's in downtrend peak back here. No signs of reversal. It took out its 200s here, tried in vain to get back above them by retesting those 200 simple and exponentials for a couple months. Once they realized this, the holders of this stock realized that it just couldn't take those 200s back, it started the next leg down, tried one last run at them, and then boom, still below the 200s and that downtrend line, and recently priced support. And then this is your next target / support. If that breaks, and it's going lower. Don't have much of an opinion on these guys. Prairie Operating, this is just something's wrong with this company. It's headed down to a multi-year low. Going to probably cross under the dollar share soon, probably be gone one day, like a lot of these. Lazard, big one here, LAZ. Just nice charting action, especially on these bigger, more liquid, larger companies. This is Lazard's what's the cap on this one? A $5.6 billion company. Divergent high, breakdown, sell signal, ended with that bottom there. When everything bottomed in April. And we've just come full circle. Divergent high at resistance, followed by a breakdown, little kickback rally. It's my first target here, 48.29. Created that back on the 8th of October. Yep. And a little bit of flagging action when I look at them. Just can see this area of consolidation going on. So this would mesh, guys, with my expectation that Friday was a start, market top, and we're on the verge of what could be, what I think has a good chance to be a crash-like scenario, a quick move down. Again, we got to break the Friday's lows to open the door to the next wave, and if so, that would mesh with some of these bear flags you're seeing here playing out, where you had an impulsive move down, followed by consolidation, and it takes a form of flag, followed by the next leg down, which would take you right to my 42.23 target. So that would give you, that would be a drop of about 17%. Piper Sandler, another big capital markets company, breakdown, little kickback rally, but and that's coming off that is a divergent high right there, just like that one was there, and that divergent high gave you a drop of about 43%. So these are where you blow the market away trading individual stocks. If you get it right, then the potential is much higher. Okay, had to pause the video there for a brief second. This one, like a lot of things, you just need to take out the recent lows to open the door to the next leg down. And longer term, if you drop down here, you can see my targets. That 306-ish target comes in a little bit above the 200-day moving averages. And then they'll, as they often do, they'll usually buy the first pullback in a while to the 200s. And then once they go, then bigger things are happening, and there's probably more downside to come that you've now, instead of just a correction, again, if you're bullish, you buy corrections. pullbacks to support, that it's most likely a trend change. And whether or not you bounce on the 200s, once you're below them, that denotes most likely you're in a larger downtrend, and that was the case there. And then once you take back the 200s, the worst is over, and you're most likely in a new bull trend. Oops, I didn't mean to double skip that. PWP, wedge breakdown. EVR, Evercore Partners, another big one. Breakdown, nice, beautiful wedge. Again, this is just a common theme, and I know it might be redundant. You don't have to take each and every one of these. It's painting a picture of, I'm watching where I think, the next, where the problems are going to be in the market. Everyone else is watching AI right now. Is NVIDIA holding up? Yep, NVIDIA's good. Amazon, Apple, Microsoft, they're all good. So the market's good. And, if the shoe drops somewhere else, and again, this is probably where it's going to drop, the economy, the consumer, financials, and like I said, any other bankruptcies that pop up, especially if we get a bigger one, those are things that can certainly put the brakes on any rally. And like so many here, this one looks to be flagging recently after an impulsive leg down, i.e. the flagpole. And should that flag break down, that's going to give you a drop to test the 200-day moving averages. So you've got about a measured target of about an 18% drop on EVR. And here's one that just kissed its 200s, OPY, Oppenheimer. And try to bounce off the 200s and a little flagging type action. So if and when the 200s are gone, probably see more downside to come. And, just like now, or just like back then, that was a nice little divergent high. So remember, we were short long before Trump stepped to the podium back in March or whenever that was. We were already short based on the same reasons that we're short now. Breakdowns in many cases, divergent highs and breakdowns of trend lines, 60-minute breakdowns. I'm not saying this particular stock. I didn't trade this one. I'm just showing you it's a similar technical posture to back then. MIAX, Miami International Holdings Capital Markets. It's a new one, just started trading in August. There's your uptrend line. MC, this is a big one, Moelis and Company. Same thing, wash, rinse, repeat stuff. Divergent high, trend line break, back test. And then a drop of 39 from about 40%. Divergent high, breakdown, back test. So far, it's fallen a total of about 14%, 15%. Pretty much there was some support in there. Nothing goes straight down forever. You always have, even after the best sell signals, you always have a period of consolidation, bounce. This one was flagging. That was a bear flag. See, and then the bear flag broke down, put even a bigger bear flag. That one broke down too. And that's kind of what's going on here again, a little flagging type action. Next week, market takes on the chin the next few weeks, like I think it will. The stock will be down here. TW, TradeWeb, breakout, but of a little wimpy little breakout so far. No follow through, no divergence or anything. Just a stock, again, bigger picture. I sometimes I'm zoomed in on the near term, looking at daily charts over the last few weeks or months, 60-minute charts. But the bigger picture in a lot of these is, there's your primary bull market uptrend line, 200-day moving averages to find that uptrend. Both were taken out in one fell swoop right here, this stock, and that's just the first leg down. Corrective waves are typically at minimum an ABC. This is just the first leg down with most likely more to come. And these online brokerages, once a good part, I can't say exactly in percentage terms whether it's going to be 15, 20, 30% drop in the market. Remember, my targets longer term are much more aggressive. You're going to slowly but surely start wiping out, taking that armchair investor, this young generation that's trading on their phones and just buying anything due to crypto or tech, whatever the hot bubble du jour right now, gold and silver. They'll be taken out, and then again, it's part of that credit unwind. They get margin calls, selling begets more selling, and then I think a lot of these newer, mobile brokers I don't know if that's TradeWeb in particular. Honestly, I don't know. If, I'm talking about the Weebles of the world and those kind of things. Those stocks will just crater. I think as those people realize that it's not as easy as it used to be in a strong bull market where all ships are lifted by a rising tide. All right, let's go to SF. Stifle, another big one. Same. It's just a common theme on the big established capital market companies like this one. Divergent high there, breakdown, and now you need to break 107. It's support, pretty good support. And then you have the secondary support, even better, about 102.50 and the 200s. That's the lights out level for that one. That's what happened here. Tried to back test, lost the 200s, and then plunged. RJF, Raymond James. And the thing is, most of these have already put evidence of a top in, just like, the markets. Well, the markets have a little more work to do. We had those bearish engulfings and the trend line breaks. That's a big start in the markets. But a lot of these two, divergent highs, trend line breaks, just need to take out their 200s. I could go on and on and on, but I want to make some money. I'm seeing things roll over today. This market's, it's still above the recent lows, but like I said, I think it can move fast, like it did on Friday. Don't know whether that's going to happen today, tomorrow, maybe in the next week, but like I said, imminent. And so 2 weeks ago, I said I figured that we'd start to get, crash like move down starting this week. And then, crash in one. You can crash in one day. I'm not looking for that. We'll never have Black Monday again. For those of you new to this, and every now and then I'll see some Yahoo write an article warning about a Black Monday type crash. That can't happen anymore because of circuit breakers. They'll slow it down and then they actually shut it down if it drops. The market drops enough. It's first circuit breakers halt, trading. The short sell restrictions, trading halts can go kick in, and then they can actually shut trading down for the rest of the day if you drop enough. So again, Black Monday won't happen again, but you can get to that same point, not in a single day, but you can certainly get there within a few days because they reset the next day. All right, last one before I go. I just had an alert on this one right here, CIFR, Cipher Mining, which I think I covered with you earlier in the video. That alert just went off. So, all right, guys, it's looking good, man. We just need to get that little nudge. Let's see some follow through selling in the financials, and then that'll ultimately spill over to tech. Those AI folks, a lot of them don't watch. A lot of people are just, most traders from my experience are they have blinders on. If they're trading gold, they're only looking at gold. I look at the dollar, I look at other things that could impact that. If I'm trading, tech stocks or the NASDAQ, I'm looking at the S&P 500. I'm looking at the small caps. I'm looking at the components of the S&P 500. And, if I don't have any red or yellow flags, and hey, be long and strong. But when you have those yellow and red flags forming and the technicals confirm it, again, you have to have the sell signals, breakdowns of support, trend lines, bearish patterns, and then that gets you in. So VIX is starting to move again today, just made a new high for the day. And here's VIXY. So we're really just marginally above, but that's it. Remember in the recent videos, I told you the VIX has to punch through these recent highs. That correlates with that 22-ish resistance on the spot VIX. And then it should just let loose once that happens. So, yeah, if we can get a nice down, especially take out the recent lows, Friday's lows in the market, you've got just tremendous upside potential on the VIX right now. All right, I'm going to wrap it up here. This has been Randy Finney with the Right Side of the Chart. Have a great day.